Federal government wants Kano-Kaduna rail project completed before May 2023. Three privatized entities removed from Bureau of Public Enterprises monitoring. Gold gains as inflation worries overweigh high yields, plus oil turns high on fears of tight supply shaking off U.S.-Iran talks. The program is Business Express, reaching you from Abuja, Nigeria's capital. I am Musa Abubakar. Now let's bring you up to speed with business development. We begin with news from the banking sector, where the Central Bank of Nigeria has debited 14 banks led by Zenith Bank a total of 356.1 billion naira for failure to meet cash reserve requirements. The debit is the first suffered by banks in the new year 2022. The affected banks include Zenith Bank with a debit of 170 million, Privatised 40 billion, and FCMB 39 billion naira. Others were First Bank of Nigeria Limited, Guarantee Trust Bank PLC, and Citibank 12 billion naira. Union Bank of Nigeria PLC, Polaris Banks, and Stanbic IBTC Bank all suffered 10 billion naira. Keystone Bank, Eco Bank Nigeria, Sterling Bank PLC, Fidelity Bank 2 billion naira, and Nova Merchant Bank were also debited. Now, it was a week of profit taking as investors gained 570 billion naira in the week ended. Muplanda Kok has more on the market.
Nigeria's stock market booked 579 billion naira gain in the trading week ended Friday, February 4th, as the week recorded 3 days of gains as against 2 days of losses. The market successfully closed out on a positive note thanks to increased interest in oil and gas, industry goods, banking, and consumer goods stocks. The NGX All Share Index appreciated by 2.33% to close the week at 47,279.92, while market capitalization rose to 25.477 trillion naira. 1.785 billion shares worth 19.6 billion naira in 27,822 deals were traded in the week. All indices finished higher, with the exception of the NGX Insurance and NGX Consumer Goods indices, which depreciated, while the NGX ASEM and NGX Sovereign Bond indices closed flat. The financial services industry led the activity chart. It was followed by the conglomerates industry and the ICT industry. A total of 24,350 exchange-traded products ETPs valued at 574,834.85 naira were traded in the week in 38 deals, as well as 61,682 units of federal government bonds. 42 equities appreciated in price in the week. 35 equities depreciated in price, while 79 equities remained unchanged.
Now, 2021 was generally positive year for the NGX indices, as all but 3 of the indices ended the year with positive returns. Chief Executive Officer NGX Temi Popola, while speaking on the 2021 performance and outlook for the 2022, disclosed that the NGX All-Share Index returned 6.1%, driven by recovering corporate earnings and improved investor sentiment. The equity capitalization rose by 5.89%, or 1.24 trillion naira during the year. The NGX Oil and Gas Index was the best performing performing index with a return of 52.52%, driven by recovery in the global oil prices and stronger performances from oil and gas companies. This was closely followed by the NGX Growth Board Index, which returned 28%. It was the year of demutualization, and groundbreaking achievements include customer experience, listings, securities, lending, and market lending. Now, joining me virtually to talk more on the year ended and prospects of the market in the new year is Chief Executive Officer, Nigerian Exchange Limited, Temi Popola. You are welcome to Business Express.
Thank you very much for having me. Good afternoon.
Okay. Now, let's begin. What are the key highlights of the performance of the NGX Limited in 2021?
All right, thank you. And again, it's good to be here. The highlight for last year, I think, marked what many people would call sort of the bottoming out of the COVID pandemic. And so with that, you saw a little bit of a return to risk-taking by investors globally. And when that happens, you typically see a knock-on effect or a follow-through effect on the Nigerian capital market. So the markets here really were no different. We had a single-digit positive return in the 7% area. If you compare this with a few other markets globally, perhaps that took more of a market-friendly approach to how they dealt with the pandemic and how they managed the economic fallout. Those countries then started to see a lot more faster recovery of sorts. But I think overall it was a very good year for our markets. The equity market returned, added about 10% or so worth of market cap. The market capitalization by value grew by 10%. The fixed income market cap grew by about 30%, which was quite good. On the ETFs, we saw a decline there in the outstanding value of ETFs, but that's quite understandable because of the rare 2020.
Okay, aside from the key statistics, what other major milestones did you cross last year as a newly demutualized exchange?
Of the viewers who may not be familiar with that term, really just refers to a reorganization that the exchange went through. That reorganization then gave birth to 4 companies, one non-operating company, which is the holding company, and then you have 3 operating companies, of which the exchange that we know as Exchange Limited is the core operating exchange as we knew it as. What this also does then is that it separates that core exchange function from the regulation function of the exchange. So historically, people think of the exchange and they think of us as regulators. So that regulating bit is now in a separate company called NGX Regulation. We have set it up to be a world-class regulation company that is, sort of standalone, very well governed, with a CEO, with a board, to make sure that the business of just regulating our market, enforcement of rules, just making sure that the market is orderly, is done quite well to international standards. Of course, as you would know, the SEC remains the apex regulator, and that role doesn't change. So what all of that does is that it then allows the core exchange, NGX in this case, to operate a little bit more commercially, to be able to fit itself really for purpose, to be able to interact closer with clients without necessarily breaching any potential gray areas, as it were. And this is really what the demutualization set up to do. I have to say that we're seeing a lot of returns and rewards for that. We had landmark, groundbreaking transactions last year, and this structure really did help us to achieve some of those.
Okay, what's your in your playbook or outlook for the new year, what is it like?
So I think it's a year that we're certainly very excited about. I certainly personally am excited about what this year holds. Our view is that it'll be a year of 2 halves, a very busy starts to the year, and then maybe a somewhat quiet finish to the year because it's a pre-election year. But in there, one of the things that we think will happen, first and foremost, is to build on the momentum that we gained from last year. I spoke earlier to a record-breaking, groundbreaking transaction we did. For the first time, you could, through technology, digitally apply for primary market issuances in this market. We'll be looking for how you can then deepen that and vertically integrate that a lot more across our product delivery to customers and to investors. A few other things that gives me excitement is some of the work that we're doing with technology companies, and in the technology sector, we are trying to position the exchange right in the center of a lot of this capital formation that's happening within the technology ecosystem. But that seems and tends to happen a lot more abroad and internationally these days. And then the third thing, of course, is a lot of the work that we're doing with just retail penetration. We are taking the business of just financial inclusion, financial literacy. We're taking that quite seriously, and you'll be seeing a lot of efforts, investment, and the commitment of resources in that direction.
Okay, tell me about further measures you will be taking to deepen the market moving forward.
Okay, this subject of deepening the markets is almost an age-old question. So anyone who wants to approach this has to really view it from this place of humility. And there are some issues there that are structural in nature. To deepen markets, there are certain basic things that have to be in place. If you just look across the globe, everything from just the macroeconomic situation to the levels of savings and financial literacy in the country. And these are areas that our nation still has some room to go. But nonetheless, we are coming from a very low base if you consider the fact that the total number of retail investors in Nigeria today is under 100,000. It then means that regardless of these challenges, I would say from a macro standpoint, there's still a lot of ground to be gained. And to do that, a lot of it will be technology. A lot of it will be looking to diversify the types of companies that we get listed on the exchange. You would have seen, for example, that we had a big foods listing. It's a sector we need to bring more into the exchange to get a better representation of the GDP. So we look for corporates within the power sector, for example, within agriculture. Away from that, of course, is everything else around just product diversification. We do not want it to be that on the exchange today, the only product you can get access to is maybe equities, ETFs, and then maybe fixed income. How do you broaden that suite of products? Because only then do you get deeper markets also. So I think it's things along these verticals that should help us to drive a deeper market liquidity.
Okay, can you give us some insight into what investors or shareholders should expect from NGX Limited from your past financial year?
Okay, so first and foremost, I spoke to this structure that we have. So really the listed entity is what we call NGX Group PLC, which is a separate company that has a separate leadership and a separate governance, sort of set up. So I would refrain from maybe making any public statements around that. But if I were to speak just to the exchange and to just perhaps just try to make some forward-looking statements around the exchange, which is the business that I look after, then I really do think that in line with what we've seen in the month of January, it should be a year that we should see listings happen on the exchange. It should be a year that we also see transactions that should create value for people. Ultimately, people come to the exchange to make money, to gain wealth.
Okay. Thank you very much, Chief Executive Officer, Nigerian Exchange Limited, Temi Popola. Now, moving on, the all-share index closed the market at 47,203.39 basis points. 285 million shares exchange hands in 5,342 deals. Market capitalization stands at 25 trillion naira. European markets are choppy as China's Shanghai Composite jumps 2% after returning from Lunar New Year holidays in mixed trading. Nekalko has more on the markets.
Hello and welcome to the Global Market Review. European stocks rose slightly on Monday as investors continued to consider last week's jobs data from the US and central bank decisions in Europe. Germany's DAX rose 0.26%, London's FTSE added 0.29%, while France's CAC 40 topped 0.05%. Asia-Pacific markets were mixed, with mainland Chinese markets rising as they reopened following the Lunar New Year holidays last week. The Shanghai Composite jumped 2.03% to close at 3,429.58. Hong Kong's Hang Seng Index also appreciated by 0.03%, while in Japan, the Nikkei 225 slipped 0.7%. U.S. stock index futures were muted in early trading after the S&P 500 posted its best week of 2022. Futures contracts tied to the Dow Jones Industrial Average shed 0.2%, S&P 500 depreciated by 0.14%, while Nasdaq Composite dropped 0.17%. African markets rose on Monday to begin the week on solid footing, with South Africa's JSE Africa Top 40 up the most. Kenya, Tunisia and Namibia also rose marginally, while Ghana traded below the flat line. And that's Global Market Review. I am Neka Oko.
Well, the federal government has certified 3 privatized firms free from routine monitoring activities of the Bureau of Public Enterprises, BPE. The companies are Federal Superphosphate Fertilizer Company, Kaduna, Cement Company of Northern Nigeria, Sokoto, and Ikoyi Hotel, Lagos. The National Council on Privatization, NCP, at its maiden meeting for 2022 approved the delisting of the companies from monitoring as requested by BPE. BPE in the request had noted that the companies had fulfilled their covenants as identified in the key performance indicators contained in the share sale and purchase agreements signed with the BPE. According to a statement by Head Public Communications of BPE, Ibe Chidi, the Bureau noted that it had carried out a review of the enterprises in line with BPE's mandate to manage post-privatization issues of privatized public companies, and was satisfied that the core investor had ensured compliance with the covenants. Now, Minister of Transportation Chubiki Rotimi Amechi has directed the contractors for the Kanu-Kaduna rail project to break the construction work into gangs for easy and timely completion before May 2023. Inaya Kalu Oka reports that the minister gave the directive at the monthly inspection in Kano State.
Working at the same time, living at the same time. If they do that, then I'm sure that before May 2023, we will have commercial activities on the track. So the Chinese are not funding the way they used to fund us. Now, up to now, we're yet to conclude the loan on this project. So we're funding this project from the budget. However, we're putting pressure on all the necessary institutions that need to give us loan. Hopefully, that before May, we should be able to get enough money to complete this project. But currently, we'll fund it through the budget. We'll approach Minister of Finance again to fund us within this period, between now and May, hoping that by May, we should be able to get the loan.
Youth in the FCT, under the umbrella of Center for Strategic Leadership and Youth Empowerment, have adopted crowdfunding as alternative to raising capital to fund startups and are now spreading the good news.
We have identified a process that there is no problem we cannot solve using our numerical strength. A year ago, young people in Anambra State, through the resources they have generated together, they were able to empower minimum of 40 persons, giving them support fund of 200,000 each to support their idea, their skills they have developed or they have trained for. And that is exactly what is expected to be emulated in other states.
The empowerment we plan on giving the youth is not by palliatives. is by, bridging the knowledge gap, bringing them together to speak for themselves, to know that they are critical stakeholders and that they need to get involved in the runnings of the country.
Oil prices rose on Monday, reversing earlier losses as investors kept bullish sentiment on expectations that global supply will remain tight as demand picks up and shook off signs of progress in the U.S.-Iran nuclear talks. Brent crude was up 60 cents at $93.87 a barrel after touching its highest since October 3rd, 2014. It slid to as low as $92.47 in an early trade. U.S. West Texas Intermediate crude climbed 25 cents to $92.56 a barrel, near its 7-year high hit on Friday, having fallen to as low as $91.36 earlier in the session. Both benchmarks rose more than $2 on Friday, extending their rally into a 7th week on ongoing worries about supply disruptions fueled by political turmoil among major world producers. Now, a quick look at prices of other commodities in the market. Now, the recent federal government's intervention in wheat production through the provision of 13,000 metric tons of improved and heat-resistant seed for local farmers by the Central Bank of Nigeria is raising hope of boosting sufficiency of the produce in the country. In this report, Victoria Olabode examines the impact of the turnaround efforts of government in the sector for both users and consumers of this confectionery ingredient.
Wheat derivatives have currently become an option of staple more Nigerian households consume to meet their dietary needs than ever before, owing to the higher prices of other major locally grown crops. Key staple foods such as semolina, bread, noodles, pasta, among others, are produced from wheat and form a regular part of meals in most urban and rural households across the country.
Over 95% of the wheat we use in Nigeria is imported, meaning Nigeria grows less than 0.5% of what we use in Nigeria.
Was ranked at number 15 in the importation of wheat in Nigeria, and that also has got a lot of almost 2 billion in terms of FX.
Processors of wheat and producers of flour and confectionaries enumerated challenges faced as alternatives are not readily available.
And there's this project they're doing on seed multiplication, because that is the greatest challenge of wheat farming in Nigeria. Getting the right seed to grow wheat, because it's not like every other seed that you can just take your old harvest and grow. Wheat is very, very sensitive. So CBN is doing a lot when it comes to seed multiplication. Also, they're looking at spreading the growing of wheat to the north central and the southwest of Nigeria. This is being piloted right now, and if it works successfully, then they're going to be growing a lot of wheat. The target is to quadruple the amount of wheat we grow in Nigeria right now.
As reality of the effects of growing national population is drawing on the country, need for more citizens to go back to the soil has been stressed as the only available remedy. In Lagos, Victoria Olabode.
Now, news just coming in says the Federal Inland Revenue Service is leveraging on the reach and the power to connect with Nigerians to partner Nigeria's largest TV and radio network in NTA and FRCN, in addition to NOA in providing broadcast content that will enlighten the tax-paying public. The aim is to bring more people into the tax net with a view to generate more revenue for execution of government projects. That's it. Business Express returns on Tuesday by 9:30 a.m. Thanks for watching.